How are you, learners? It's another time that we are meeting so that we can progress with our revision. And remember, we are revising November 2019 sitting. And today I would like us to look at question number 4. Question number 4. That is November 2019 question number 4. Question 4. We have part A and part B, and we are going to start with part A. So part A reads like this. Bill Sign is a retired engineer. He set up factory complex in an industrial area on 30th September 2017 to fabricate mechanical and auto spares at a cost of 48 million. However, operations commenced on 1st January 2018. The cost comprised the following. So we have factory building, office within the factory building, reinforcement of concrete floor to affix the factory, the machinery, land, architect fee, parking bay, electrical wiring, conveyor belt, lift and escalators, special shafts for lifts. He also provided the following additional information. Number 1, additional structures and works constructed and utilized from 1st January 2018 were as follows. So we have residential house, workplace nursery, a drawing and design room. Number 2, to improve the performance in the factory, an Oracle database that provides crowd service was constructed at a cost of 450,000. The computers in the drawing and design room had computer-aided design CAD application installed at a cost of 270,000. Number 3, a building that has been constructed at a cost of 12 million was leased from Jaram Manufacturers Limited for 5 years. The annual lease rental were agreed at 2.8 million. The bill imported processing machinery from China at a cost of 5.2 million and installed in the building. Number 4, 2 warehouses were constructed at a cost of 2,250,000 and utilized from 1st September 2018. Number 5, the following assets were purchased or constructed during the year. We have furniture and fittings, including 220,000 for the workplace nursery, library, display furniture stocked with mechanical engineering volume, computers and electronic adding machines, motor vehicles, lorry, tuk-tuk for the messenger, backhoe loader, additional processing machinery, and mobile clean. Required capital allowances due to the bill for the year ended 31st December 2018. This is about capital allowances, and as we know, capital allowances are many. We have more than one, and it depends now on the investor that we are provided with. So the investments that are done, they are the one that guide somebody when computing the capital allowances. For instance, if you have done an investment of a factory, then ID, investment deduction, need to be calculated. If we have invested in computers, then we need to know that again, we need to calculate wear and tear allowances. So because there are many, we are supposed to be guided by the investments that are done. So let's see the capital allowances that we are supposed to calculate at this point. So let's start with ID 2018. So we start with particulars, qualifying cost, and ID 100%. The items that qualifies for ID in my question, the first one is factory building. Factory building. And this factory building is costing 18,750. 18,750. 18,750. The second one is office, which is within the factory building. If the office is within the factory building, it can qualify for ID or IBD. So if its cost compared to the total cost of the factory building is less than 10%, then it qualifies for ID. But if it is more than that, then it qualifies for IBD at a rate now of 25%. IBD at a rate of 25%. If you take 6250, you divide by that total, outright you find that this is more than 20%. It's more than 30%. And therefore, this one will not qualify for ID. It will go to IBD. Then we have the third one, reinforcement of concrete floor. That is ID, concrete floor. And this concrete floor is 1650. 1650. 1650. The other one is land. Land does not qualify for capital allowance. Architect fee ID. Architect fee. That is ID 2430. 2430. Then we have parking bay ID. Parking bay. That is ID 990. 990. Then we have electrical wiring ID. That is ID 1480. 1480. Conveyor belt again is ID. Is ID. That is 1200. 1200. Lifts and escalators, that is WTA class 4. Special shafts, that's ID. Shafts, that is 3250. 3250. Additional note, the bill provided the following additional information. So we have number 1, this is about industrial building, so that is IBD, and I want ID, so I skip that. Number 2 is about computer softwares, so they qualify for WTA at a rate of 20%, so I skip that. Number 3, a building that has been constructed at a cost of this 12 million was leased, so we cannot get ID on that. But we imported and fixed a processing machine. So we have processing machine on this building, which costed 5.2. 5.2. So that qualifies for ID. Number 4 is about IBD. Number 5, furnitures, that is WTA. Fixtures, WTA. Computers, WTA. Motor vehicle, WTA. Lorry, WTA. Tuk-tuk, WTA. Backhoe loader, WTA. Additional processing machine. Additional processing machine. Again, the ID. That is 9 million. 9 million. Mobile crane is WTA class 1. So, allow me to go to IBD now. IBD. So this is total ID for 2018. So allow me to move to IBD. IBD 2018. IBD again, we are supposed to maintain a number of columns, and they are as follows. So we can have like particulars here, qualifying cost, rate, then IBD, then IBD. So those columns are enough. So let me start with the one that is in the list, that is office. Office 6250, but I will calculate its IBD at a rate of 25%. So it is 6250. We multiply by 25%. 1562,500. 1562,500. Then from there, the other form of a building is not one. We have residential house. Residential house 960. This is 10%. 10%, so 96. Then we have workplace nursery and design room, which is 1200 and 720. So 10% again, 10%. So this is 120 and 72. 120 and 72. Number 2 is about computer software. So that is WTA. Number 3 we are done. Number 4 we have warehouses constructed at a cost of 2250. So we have warehouse 2250. Warehouse 2250. The rate is still 10%. But these warehouses, they were used from September. So we have September, October, November, December. So those are 4 months. September, October, November, December, 4 months. So 2250 times 10% times 4 divided by 12. So this is 75,000. 75,000. So according to me, those are the items that I can see, which again qualifies for IBD. So I go to the total. So total IBD for 2018. I'm free to move to WTA now. We have WTA 2018. So we can create the following columns. Particulars. We have class 1 at a rate of 37.5%. Class 2 at a rate of 30%. Class 3 at a rate of 25%. And class 4 at a rate of 12.5%. When calculating WTA, we normally start with opening balances if they are there. If they are not there, you ignore. In my question, we are starting this company afresh. So I have to ignore them. So the first item, I have lifts and escalators that are costing 4 million. That is WTA class 4, 4 million. Then from there, note 1, no, note 2, I skip. Note 3, I skip. Note 4, I skip. Note 5, I have furniture. Furniture that costs 620,000. Then I have fixtures that cost 480,000. Still class 4, for 80,000. Computers and adding machines. Computers and adding machines. This belongs to class 2, 840,000. Motor vehicle. So these are class second hand BMW. This is class 3. And this is a non-commercial vehicle. So non-commercial vehicle, the price should be restricted to 2 million. Lorries 4 tons. This is class 1, 1.8. 1.8. Tuk-tuk is class 3. Tuk-tuk is class 3, 180. 180. We also have backhoe loader. This is a heavy earth moving equipment that is self-propelling, so class 1. Heavy earth moving equipment that is self-propelling. And we have also mobile crane, which is also a heavy earth moving equipment that is self-propelling. So do I see any other item that qualifies for WT? Any disposal? The answer is no. The answer is no. So what we need to do now, because if we had the disposals, we have to less. Now that we don't have disposals, so we just get the totals. The first one is 1800 plus 3680 plus 1900, 7380. So 814. 2 million plus 180, 2118. So 4620. 4620 plus 418. 4620 plus 418. I will get 51. 51. So then we calculate WTA 2018. So we have 7380. 7380 times 0.375. So we have 2,767,500. So balance is 7380 minus that, you get 46,500. The second one is 840 times 0.3. You get 252. So 840 minus that, you get 588. 2180 times 25%, you get 545. So difference 2180 minus that, you get 1635. So 5100 times 12.5. So you get 637,500. So 5100 minus 63, 637,500, you get 44,62,500. And remember, we are calculating capital allowances. So what we want is these figures. So these are balances of the values of the assets remaining after capital allowances. But what the examiner wants is this capital allowance. There is also capital allowance relating to note number 2. That is computer software. Computer softwares. So computer software, we calculate it at a rate of 20% times into bracket 450 plus 270. So the computer software, it will be equal to we have 450 plus 270, you get 720 times 20%, you get 144. So computer software, so we calculate computer softwares qualifies for capital allowance at a rate of 10%, at a rate of 20%. So we can finalize. So the totals are, we have 18,750 plus 1650 plus 2413 plus 990 plus 1480 plus 1200 plus 3250 plus 5200 plus 9 million. We have 43,950,000. Then you have 16. Sorry, that is 1562 500. 1562 500 plus 96 plus 120 plus 72 plus 75. I have 1,925,500. So that is the capital allowance. So in my question, we had three major capital allowances. That is ID, IBD, and WTA. And that is what we have just done. So allow me to move to part B of the question. It reads like this. The following information has been extracted from the records of Leatherman Limited, who are regional suppliers of electronic equipment and appliances, for the year ended that was December 2018. So you have operating profit before tax and other incomes, investment income, leasing of electronic equipment, and we have rental income. Additional information is also provided. Like we have investment income comprising interest income from Post Bank, fixed deposit account with Loada Bank, savings account. Then we have dividend from B&M Company Limited and Kampuni Sacco Society Limited. Number 2, we have rental income is arrived at after deducting the following expenses among others: mortgage interest on property, purchase of water meters, caretaker salaries, displacement of iron sheets with roofing tiles, withholding tax on rental income. The following expenses were considered before arriving at the operating profit before tax and other incomes: salaries and wages, retirement fund contribution, depreciation, bank interest, provision for bad debts, legal and professional fees, repairs and maintenance, salary expenses, donations, compensation, instrument tax paid for the previous year. Then construction of the watchman booth at the gate. Number 4, salaries and wages comprised of directors' allowances 300,000, directors' watchman salary, and salaries to other staffs. Number 4, bank interest include that of an overdraft taken by senior manager of 40,000 on the managing director residential house mortgage of 6,000, and the rest loan belong to the bank. Provision for bad debts is also analyzed, whereby we have this analyzed figure that was posted to the income statement of 10,000. Number 7, we have legal and professional fees comprise correction of trade debts, renewal of lease 99 years, accounting fee, audit fee, tax appeal, and staff loan collection. Audit fee relates to an inquiry by the Revenue Authority which revealed discrepancies that led to higher tax liability and penalties. Number 8, sundry expenses constitute staff Christmas party of 17,000, tax of 17,000, tax penalty for rate filing of 3,000, school fees 40,000, and other allowable expenses of 90,000. School fees was for the director's son, and the company agreed not to debit in the income statement. Number 9, donations were to the county governor political party campaign kitting. Number 10, compensation was to staff member who had not been issued with safety equipment and uniform as he carried out at the current premise, leading to him being badly injured. For 10 marks, the adjusted taxable profits. So this taxation of a company, again indirect methods. So what we are going to do, so we have Latheran company computation of taxable profit or loss for the year ended that 1st December 2020. So that is 2018. So you have particulars and we have shillings here. As I have said, these items are given after reporting an accounting profit. So the operating profit or accounting profit is amounting to 3.8 million. So as usual, we add back disallowable cost. Add back disallowable costs. These disallowable costs, if you start with note 1 is about investment income, so no expense there. Note 2 is about rental income, again no expense there. But number 3 is where we have expenses. And we have salaries and wages. We know they are incurred purposely to generate the taxable income, so it is allowable. Retirement fund contribution is also allowable. Depreciation is not allowable. Depreciation of 400,000. It's not allowable. Then bank interest 180, that is normally allowable. But note 5 says bank interest include that of an overdraft taken by senior manager of 40. So that is not allowable. So bank interest relating to senior manager, that is 40. That 40 is not allowable. Then and on the money and the one relating to residential house, again not allowable. The one relating to residential house, so of 60,000, again that one is not allowable. It's personal in nature, that is why we are not allowing it. Provision for bad debts, we have the analysis at note number 6. At note 6 we have bad debts written off, which is allowable for customers, but for staffs it's not allowable. Bad debts relating to staffs, that one we cannot allow. 18,000, sorry, 14,000. The other thing is under this provision, and we know provision, we need to know whether it is for general or specific. If it is for general, remember it is not acceptable, but for specific it is acceptable. If you look at the provision brought forward, which is for general, 3% of the account, that means it's general. We started with 8, but when clearing at the end of the period we have 9. So there is increase in general provision of 1,000, because it is 9 minus 8, which is 9, which is 1,000. Then I progress. Legal and the professional fee. Legal and the professional fee, normally it is allowable. But when you go to note number 7, we have some disallowables there. It's analyzed at note number 7, whereby correction for trade debts, that is allowable. Renewal allowable. Accounting fee is allowable. Audit. But audit, if you look at that paragraph immediately after that, it says audit fee related to inquiry by KRI which revealed discrepancies that led to higher tax liability and penalty. So that audit fee, then it will not be allowed. Audit fee. But normally, audit fee is allowable. If you come across it, it is an allowable expense. Tax appeal is not allowable. Tax appeals 30,000. Staff loan correction, no. Staff loan correction. Staff loan correction. Staff loan correction, that is 5,000. But if it is to customers or clients, that is allowable. That is allowable. From there, we go to repairs, and the repairs are normally allowable. We have also surgery expenses allowable. Donations, under note 9, we are told that donations were to county government political party. No, donation to political party is not allowable. Donations. But if it is donations to registered charitable organization, that is allowable. Like donation to children's home, Red Cross, AMREF, those ones they are allowable. But political party, no. So these surgery expenses is also analyzed at a note number 8. And it reads like this: surgery expenses, remember normally it is allowable. But you can include something there which is not allowable. For example, surgery expenses constitute staff Christmas party, that is allowable. It is allowable in the company, so you tax the staffs. Tax penalty is not allowable. Tax penalty of 3,000 for late filing. School fees 40, and other allowable expenses of 90. School fees was for director son and other at the company agreed not to debit, so it was not subtracted, so you cannot add it back. So the other one is compensation. Note 10, compensation was to staff member who had not been issued with safety. That is our fault, so we cannot allow that. Compensation of how much? 92. Construction of watchman booth at the gate, so that is not allowable. This is a capital cost, which is 240. That's a capital cost. Any other disallowable cost? Any other? Bank interest, salaries. But salaries not for comprise of director's allowances allowable, director watchman salary. This is allowable in the company. Then we tax the director as part of the income. And staff and salaries to other staff, that is also allowable. They are helping us to generate the taxable income. So that is the end of the disallowables. So allow me to go to I raise capital allowances. I don't see any asset around, so we don't have capital allowance. But we have now incomes. So we need now to less. We less the non-taxable. And in this case, we will not less them in fact because they are not included. So we need to add them because they have not been included. So what we need to do is to add them. So the first one, we have rental income. Rental income, in this case, rental income under note number 2, we are told that it was subject to a withholding tax. And we know very well, rental income subject to a withholding is subject to a withholding tax. Rental income that is less than 10 million per annum, but above 144,000 per annum, it is subject to a withholding tax of 10%, which is final. This was subject to a withholding tax 10%, which is final. So it is not taxable. We just need to leave it like that. But if it was above that, we need to take the incomes, we less the costs. So we move to the other income, the other item, which is dividend. These dividends, we have dividend income, and that is our investment income. And this investment income is analyzed at a note number 1, whereby we have interest from post bank. Interest from post bank is subject to a withholding tax of, is tax exempt. Interest from post bank. So I can analyze this and investment incomes. So we are saying for rental and investment income. For rental income, we are simply saying that 10% withholding tax is final. So because it's paid every month. Then we have leasing income is taxable. Leasing income is taxable, which is 50,000. That one we tax. Then we go to interest income. Interest we have from post bank. Post bank. This is tax exempt. Tax exempt. From fixed deposit. Fixed deposit. Remember, interest received by companies, withholding tax is not final. So this one from fixed deposit, 246,500. 246,500 we multiply by 100 divided by 85. That is taxable. And again from savings, which is 170 times 100 divided by 85. We are doing that because we tax the gross, not the net. Then from there, we have dividend. This dividend received from companies or circles, 5% withholding tax is final. So they are not taxable again. So we have 246, 500 times 100 divided by 85. You get 290. This one is 170 times 100 divided by 85. You get 200. So we don't have any other income. So we get the taxable income, taxable profit for the year. Taxable profit for the year. Just confirm everything. So we have that. So now we can just get the taxable income. So we have 3.8 plus 400 plus 40 plus 60 plus 14 plus 1 plus 15,000 plus 30 plus 5,000 plus 150 plus 3,000 plus 92 plus 240 plus 50 plus 290 plus 200. You get 5390. And that is the taxable profit. If you ask me to get the tax liability, this is a company. So tax liability, it will be 30% times 5390. So times 0.3, I get 1670. Because companies are taxed at a corporate tax rate prevailing in the year of income. So I just multiply that one by 30%. That is for resident company. If it was a non-resident company, we tax it at a rate of 37.5%. Now we come to the end of our question today. And as usual, I will give you the assignment. Remember, for the purpose of proper preparation, we need to do more and more questions. So what I would like you to do is I'll give you assignment from our revision partner so that you can revise on your own. In our revision partner, we are under the topic of taxation of incomes of persons. That is employment income and business income. So I'll expect you to address like the following questions for practice purpose. That is May 2014, question 3A and C. That's about taxation of partnerships. We also have that is partnership, that is December 2013. But we have a company, that is December 2013, question 2A and C. Taxation of Light Traders Limited, that is a taxation of a company. So you can also attempt that on your own. Yeah, there is also another question. December 2012, question 2 is about Lemuru Enterprises Limited. So can you do that for practice purpose? This is what we have done about taxation of companies, but can you attempt that for more and more practice? So that marks again the end of our class today. So let me stop my class at that point. We meet next time so that we can proceed with the blocks. So thank you.